The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome. It is April 15th. And another wonderful day at the headquarters of Technical Trading and Investing, TFNN.com. I'm your humble but lovable host, David White, for the Power Trading Hour, coming to you 2 to 3 each trading day, Eastern Time. And we've got a market that is starting to move out here. Last week, I thought two things. One, that the S&P was headed back to about 1555 or 1550, somewhere in that neighborhood, 1560. The options were actually showing 1550 plus or minus 10 points. And we continue to see that kind of pressure. Kind of surprised we got it all at once, but I think the gold movement out here has spooked the market. Right now, what am I showing for gold? Where is it at? Minus $135, 1366.70. And I have to thank Tom O'Brien for an excellent call, and also during the breaks on Friday's episode of the Tech Insider on his show, we were talking about how much the requirements were on the gold contract. I hadn't traded it in a while. I found that basically trading options for the last couple of years has been something. Traded futures a few times. But coming into last night's numbers from China I was basically loaded up in case they missed out there, and decided that this was one of the great times to play futures, since you can trade them almost 24 hours a day, unlike options. But at least you have a limited loss on options. But just continue to see movement that is rather interesting out here. You know, dollar index $82.36, and you see the dollar kind of pulling back and doing nothing with this huge gold move is very interesting. But you know, this is the kind of things that happen when bubbles burst. I was talking about it last week. Actually wrote about it in the newsletter this morning. That all I could think about from Friday to pretty much this morning was the whole pets.com thing about 2000. A company came along with no real business plan other than we're an internet company. We're going to sell pet stuff on the internet. We're going to lose 5-10% on every sale. And you know what else was going to happen? Well, you know, we don't have a real plan out here. And the thing, just because they advertised the living daylights out of it, ended up being the Beanie Baby of, 1999. I think it lasted less than a year and a half as a public company, and was bankrupt. There's your money, there it's gone. And that kind of gambling mentality, just with Bitcoin last week, and the movements that we're starting to see in gold, make me suspect that we've got that top of the market caused by Ben Bernanke, the wonderful bubble man of 2013, who never saw a problem he couldn't throw money at. That's exactly what they did. It doesn't do any good. If we wanted to get out of this problem, the obvious solution that's worked in the past is capitalism, not socialism. And taking water out of the deep end of the pool and taking the shallow end and pour it in is a temporary solution. It makes people think you're doing something, but in reality, all you do is create a bubble. Everything since about, I'd say January 1st, has been bubble time. Mostly caused by huge short interest at that time. I brought up the article last week where we basically had almost all-time lows for shares of stock in the S&P 500 short. We were down to about 3%. I think I saw that on last Thursday. Just about everything that we have says and shows that there should be a fairly decent downside to this market. Everyone was long. It's no different than Apple. Everybody was bullish on the thing. They had to have it. They had to do it, and that was it. Anyway, we're going to get more to this in a few minutes. I just wanted to bring up the passing of Jonathan Winters over the weekend. Always loved his comedy and his TV show. He was about half nuts to begin with, full nuts by the time he died. Always had problems, but I think a lot of comedians all do have problems. They all are somewhat messed up, and maybe that's what causes them to get into comedy. But he had a whole host of different characters, but I think his, if you had to go back and look at one thing, it would be probably one of the best movies of all time. If you haven't seen it, this is certainly one that should be on your Netflix queue if you don't have it, or rent it. And it's a mad, 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 mad world. About 15 big headlining stars in the movie. But when I was building my house, when I came down here in 97 or 98, after I'd been down here for a year, I decided, well, I'll go ahead and stay. So I built a house, and they asked me what I wanted. And I said, I want the palm trees from It's a Mad, 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 Mad World. So I put them in there, and I always enjoyed it. And everybody came by. Everybody knew exactly what it meant. If you haven't seen the movie, you'll understand, when you see the end of it anyway. Anyway, a great career, a great guy, lived to be 87, had a good run out there, and I think he's already been missed and is missed still. As we get into the news out here, it was all about the China syndrome. If you dig far enough, you'll keep on digging. You go right to China is the old kid's story. You dig, we'll go right to China. Well, not quite, but certainly the China syndrome, which is the nuclear plant melting all the way to the other side of the planet, doesn't hold water because, of course, gravity would stop it at the center. But that's the old idea, is that it would continue going all the way through the planet. But what has happened is the same thing with the numbers. Everybody knew that Europe was already in a fairly decent recession. China is following that. Their numbers are significantly down. Who knows if they're real or not? These may even be highly optimistic. But when you continue to look at the amount of raw materials on the docks, things like copper and iron, it is very hard to figure out how anybody thought that China was roaring back. When we look at other things like copper, we out here? On copper and other things, been pretty much. But if you're watching on Tiger TV, or if you're not, I'm not going to go through all the numbers, but they were pretty horrific. There's nothing good in any of those numbers. It started to selling, and I just happened to be up working on something else, lucky, and was able to pull the trigger quick enough on a gold short. I'm already out of it, but I think we're probably going to see some kind of bottom in gold, at least tradable, maybe in the next few days. You normally want to give any of these huge movements about 3 days to find out whether or not you've truly gotten a bottom. Maybe get a little bounce, come back, retest it one more time. But even then, we would probably say that the 1250 area is still available in gold, and it's been my original target on gold, just because I thought that's about as far down as anybody would take it before they gave up and said it was over. Already starting to see some signs of that. The end of the gold, all the other stuff, probably not true, just like the end of the PC story is not true, just like everything else. News media almost always gets it wrong. But we do know is, I suspect, that we've got probably at least 3 months of a very significant correction coming in the broad markets. Very few shorts, and that's what's probably going to be as soon as you start seeing huge down movements in the stock market, like we had today in the S&P, and extremely light short interest. There's just not any natural buyers out here. And how many days have we seen a minus 30 S&P cash? I think we're probably going to, if it continues like this, we're probably going to see a 1550, 1555 close. The movement on Friday's afternoon was extremely suspect. and I was very surprised by it. It should have closed about another 5 points down, but what can you do? Very light trading. You can move it out here. You get everybody to hang out one more weekend. GLD's off 12, which is fairly significant, and I think we've got to give a lot of credit to Tom out there being a specialist in the gold market. I've basically been looking at all the charts from the gold miners, thinking this was the week that we might bottom out, and you get a couple of moves like this in gold, and you will get an exhaustion trade out of it. Whether or not that's the bottom is hard to tell, but you can only wash out people for so many times, and we pretty much got that now. Of course, there is no limit down in gold, so you can easily lose your shirt either way in gold futures. There's nothing to stop them out there. And, it's a little significant. $5,900 will buy you a gold contract, and I think you have to keep, $5,400, $5,350, something like that, as the backstop to your play out there. But very interesting, and certainly made some decent coin overnight in that, but I'm already out of it and looking for this thing to find some kind of strategic low that is mostly an exhaustion move, and find out whether or not we bounce when we pull back down. Does that or does the area probably right under this price point in gold hold, or do we see that 1250? I'd certainly like to see the 1250. People are already sick of gold today, and probably going to see that for at least 3 more days. I don't expect that we're going to see that kind of movement or any kind of instant whiplash back. But we could see 2 or 3 days of this together, and then maybe an attempt to actually get down to the lows. 1561.55 on the S&P cash, over 3 billion shares. How many days do I come up here and say the volume's light? 2.2 billion, 2.4 billion, 1.9 billion. We got 3 billion people. This is some action, and we're going to see just a little haircut off the top, just a little off the sides. And, of course, they took about all of it. You're going to end up with a mohawk out here. I've got I told you on Friday that I placed up to 4 new positions over Wednesday and Thursday last night. One of them's up 100% today on the puts that I had in the energy sector. Of course, that was significantly down, or still is significantly down today. But we'll look at it. Other things in the news, well, I guess you can say that singles largest one-day drop in gold since 1974. A lot of people are in the conspiracy theory part of the Fed orchestrated smash of gold. I think there's a much more logical explanation that Tom and I talked about it on the Tech Insider Friday, which is everybody knew where the bodies were buried at Goldman Sachs, and they pulled the ripcord on Wednesday with the gold sale, and that was pretty much it. We'll be back in just a minute.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And we come back. I forgot to actually, I referenced this but didn't show it last week, and that was one of the things I ran across, and that's Bespoke Investment Group. If you check the website out, they have some interesting articles and data from time to time. This was the one that I caught. I kind of knew what it was. The best data actually comes from Bloomberg. They charge you about $2,000 a month for it, where they kind of estimate the short interest in individual stocks in between the movement of the twice-a-month reporting. But when I saw this is one of the things I brought up. Forget who I was talking to. I think on Thursday or Friday. That this is the kind of things in a market that actually lets you know that there isn't a lot of structural strength in the market, and that is when there isn't any shorts in the 500, it's easy to really have a big movement. And of course, most people miss it and don't short it, and you continue to have no natural buyers on the as the market goes down. And this is where you get really fast markets. We've seen it in gold. I suspect that we're probably going to see in the next 2 to 4 weeks an equivalent kind of scare the snot out of you day in the markets. And again, you know, we could go right back to the January 1st, 2nd, 3rd levels in the S&P without any problem. We've been up on very light volume for a while. And I just suspect that the rest of the world is in at least one of a recession, and we're probably going to have to go, I don't know, 90 days probably before we find some kind of bottom for the general market, and at least 30 to 45 days before we find individual stocks that have bottomed. Some people in the den complaining that they're having problems with their data. Very fast market. Is not uncommon to see a lot of these things actually break under heavy loads like we're seeing today. We're probably going to end up with about 5.5 billion shares by the end of the day if we continue at this rate. And that's probably going to be a good signal. But also, we haven't had that kind of volume in a long time. Rarely in a long time, let me put it that way. And we could see other things start to break down, including things like circuit breakers in the market. You can give me a call at 877-927-6648. That's 877-927-6648. You kind of picked a bad week to go public. Wanted to get into that. We've got, I think, 6 or 7 IPOs scheduled for this week. I suspect a lot of these things are going to get withdrawn before the end of the week. I can't even say it. Black Hawk Networks, Safeway food spinoff, Hannon Armstrong. It's a REIT that provides financing for clean energy and other infrastructure problems. Intelsat, of course, the space-based telephone service and satellite system. This thing's been trying to go public forever. SeaWorld Entertainment, who also does SeaWorld and Busch Garden, which is, I don't know, I probably live, 25, 30 minutes from it. But another kind of theme parks, 11 theme parks, they're trying to go public. I have no idea why. Taminco Corporation, TAM will be the symbol. It is a pure play producer of, what can we say, the stuff that goes in fertilizer and stuff like that. And I think they're big down here in Florida, or have some big mines, but I'll have to check that out. So a lot of those companies out here, and I want to get to stocks fairly quickly, and some of the ones that are moving. We have some bogus upgrades out here today. I wanted to get to those. Probably the first one is Netflix, a company that I've never heard of, NFLX, was coming out with a huge buy rating on Netflix. Got to figure that out. And it's rather interesting to see these people come out with a buy at, $160? Where was their buy down here when the chart actually said something in the 60s? Actually, you had a nice low out here December 2nd, $62.37, 43 million shares. Never got to that. When it closed back up above 62.37, would have been your buy signal out here. Couldn't buy it down there. Have to buy it 180. I call bovine excrement on these folks. And, of course, since I haven't heard of them, I'm not going to push it out there. But look for more of this kind of stuff. Icon is still trying to sell his shares in this thing, I'm pretty sure. We're probably going to have a lot of positive press. Netflix, not quite ready. This is a good signal that Icon is still pulling the strings. There's still a man behind the curtain on this thing. I suspect this thing's headed back down to $52 here, $60 or something in the not too distant future.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Baby, let me be your love teddy bear. Put a chain around my neck and leave me anywhere. Let me be your teddy bear.
I suspect our engineer's just got a little too much time on his hand to go out there and try to make my my theme song a teddy bear out there, but we don't know. We're going to go right to Jason in Hawaii. How you doing today, Jason?
Yeah, hi. Thank you for taking my call.
Where are you in Hawaii?
Honolulu.
Okay. I spent the first 10 years of my life there, so not a bad place. Not a bad place
Hawaii.
to. Huh?
You're from Hawaii, I see.
Well, I was 3 months old, born in Texas, but I was 3 months old and lived there until I was almost 11.
Oh, you missed the weather then.
Well, Florida's still pretty good. But at 10 years old or 11, almost 11, I moved to Missouri and saw snow for the first time. Yes, I was kind of there was some culture shock out there. But a great place to live, and I trying to remember which street I grew up on out there. But anyway, what do you want to look at today?
Well, actually, I have a position in GLUU, G-L-U-U. So I got in at the 50 days simple moving average. And then I'm thinking of holding it until it challenged that peak after they announced that they are going into gaming apps, gambling apps.
What is your symbol again? He gave the engineer got the wrong one?
No. I did give him the Proto Lab. He asked me,
okay.
So I think I'm getting into that.
Let's look at that one first. You want to buy it?
Yeah, I want to buy it.
Okay, you basically had a sell signal up here at the top. It went up to $53.91 on 3.1 million shares. You went above it, closed below it on April 11th. So you have a valid sell signal. You are more likely going to be in a consolidation where this thing is probably going to be, about $43 before you could think about buying it?
Exactly. That's actually what, 43.15.
Yeah, yeah, 43.11 is what I have back in here, but yeah, it's going to be right in that range. Interesting stock. I just have a feeling that 50% of any trade is the broad markets, and I just don't see for the next 60, 90 days that that you're going to have a lot of help in this one. I just think that the markets are spooked, and you probably have good 60, 90 days, probably maybe a July rally or something, maybe setting up, but I think you're going to have a hard time in this market for a while. What was the other one you wanted to look at?
Well, I have this already, GLUU, G-L-U-U.
G-L-U-U?
Yeah. I'm thinking of...
GLUU Mobile, okay,
and get into this one. So your engineer actually got the right symbol. I actually didn't tell him about this one.
Well, he's always kind of a little glassy-eyed in there, not exactly sure what he's smoking, and so I have to check on him from occasionally. He listens to really bad music a lot, too, so I have a feeling that's kind of like made his brain all mushy and soft. But I'm thinking you've got you've got two high-volume lows down here that have not been tested. You got one at $2.46, and you've got the absolute low down here at $2 that was higher volume. So this one would be the one that I think would be the weaker of the two you just talked about. This thing would have to, for me to get involved in it, it'd have to get back down to $2 on very light volume. And I think that,
I actually got in at 258, so I actually have a cushion that I could play with.
I just don't see an ABC setting up or anything out here. You've got, I'd take my money. I think you got an 80% chance of this thing testing $2 probably in the next 60 days.
Because the 50 days is at the 258, yeah? The 50 days moving average. So
have you ever tested moving averages?
This is one of the things that I use to trade, but I look at the candlestick. I also look at the volume.
One of the things, do you have Excel or a spreadsheet?
Yes.
Okay. I do some testing of those averages to figure out what you have. If I was going to use any moving average, it would be about a 9-day moving average. I'm just not a big fan of it. It's infinitely easily testable. And I just get a lot of stocks out there and start whipping through them in Excel and tell me whether or not you still want to follow moving averages after that. That would be my opinion anyway. I've thoroughly tested them. Huh?
What is your favorite technical indicator? Or what do you find most useful?
My favorite technical indicator is the test of previous highs and lows on 50% volume. If I can see a stock out here that had tested its previous high, like the one we just talked about, what was it? No, PERB. This thing went above its previous high. It first had 3.1 million shares. It now had 1.6 million shares at the same high. It tested the high with half the volume. That's the best indicator I've ever found out there. If you can, even if it tests at 10% light, I'll kind of give it an iffy. If it can test the previous high on half the volume, that's pretty much it. And it's the exact same thing out here at lows. If you can get something to test its low on half the volume, then you're pretty good. Like, let's look at Apple real quick because there's a good example out here.
Is that called a divergence you're talking about?
Yeah, it is divergent. I mean, you basically get to the same price point, and no one's buying the stock at that price. Tells you pretty much the supply and demand. And if you go back to Wyckoff, it's all about the path of least resistance. Is the path of least resistance higher or lower? And I specifically almost always go after stocks that test previous highs or lows on significantly, not just minorly changes in volume. And that's what, if you listen to my show long enough, you'll see I go through a lot of those stocks at the, or close to the end of the show, normally after the bottom of the hour. But when we look at Apple out here, now, I hate the market, and 50% of any move in a stock is going to be about the broad markets themselves. About 25% is the sector. Now, if I was going to look at a chart that looked fairly decent, you made in Apple the high low, the big low down here, January 25th at 43 million shares. Then you got into it with 20 million shares. Of course, you bounce. We're still back in here. There isn't a whole lot of volume in here. If this market was going to turn around, I wouldn't have a problem hopping into Apple, but that Apple could come down here, test all these high volume, or that high volume low on no volume, and still really couldn't get out of the gate, was a good indication that no matter what happened out here, the market was a lot weaker than everybody was telling you. When you start seeing these stocks, they test the lows on very light volume, you get really kind of tepid bounces out of them. That's probably telling you more about the market than the stock itself. I don't think this thing, you probably get back down to 395 or something, but when you do get this thing ripping, it'll probably rip right back up to 435 if we don't see any kind of volume in a while. But if I look for anything, it is high divergence at highs and lows, and that's just I look for anything like 40%, 50%, and if it's an ETF, I want to see 25% changes out here at highs and lows on an ETF, 50% or near 50% on stocks.
So let me get it right. So I'm looking at Apple right now. So it's testing the low with like 1/3 of the volume. It's only 6.7 million share traded right now.
Yeah.
So that means that Apple is forming a very good bottom.
It's certainly telling you people are not willing to sell this thing down here at the low.
Right. Like you say, the sellers are on strike. Right. So
but the market is horrible, which is 50% of your trade. And the other side of that trade is 25% is the sector it's in. It's in technology, which is also the worst sector of all of them out here in the market right now. So you've got 75% of the wind against you. You've got a fairly decent stock that's pretty much beaten up already. So at 420, can this thing still get pushed down to 395? It certainly can, because it's got 75% of the market against it, at least the way I look at it. So, you want to look at it, okay, what's the broad market doing? What's the sector doing? And lastly, what's the stock doing? So normally what I'll do is go out there and look for stocks that are testing lows on light volume and highs on light volume. And you know what will happen every once in a while, every year or so, you're going to see just a huge crop of stocks test the highs on very light volume. In, May 5th of 2000, was it 2007 or 2008 that all the broker-dealers blew up? What was that, 2008?
Yeah, that was before the crash.
It was that summer that Lehman went bankrupt. I think it was 2007. Anyway, maybe someone in the den remembers exactly. I'll have to remember it. But if you go back and look at the charts, every one of those broker-dealers, Fannie Mae, Freddie Mac, every single one of them was testing the previous highs on about half the volume. If you could go back and find the volume for the stock charts for Lehman Brothers, you'll see the exact same thing. And it's that May 5th date. And you'll see that right around then, within about plus or minus 5 days, every single one of the broker-dealers was blowing up. And Fannie Mae and Freddie Mac had already done it. But all of them go out there and do it. And when you see that, it is an excellent signal either to go long or short when you start seeing all the stocks in a particular sector start giving you the same kind of signal. And, that's the super gravy. You might find one stock out here like this, that Apple, that's going to hold up better than the rest. and I think it probably will. But I think if the market continues going down, it won't matter on Apple. It may not be the stock to short here, but it's certainly...
No, I won't short Apple.
Yeah. But I mean, it's
forming a descending triangle. If I look at the last 3 months, it's a lower high, but the same low that they're testing, 419.
Yeah, it's not a bad-looking stock. If everything turned around tomorrow, I would probably buy Apple. The problem is that I just think that 75% of the trade is against me, and only 25% of the trade is with me. So, that's one of those things where that's my model, and actually you can find a lot of academic reports where they show the correlation of stock to the sector it's in and the broad markets, and the model almost always comes out the same. About 50% has to do with the broad market, 25% with the sector that the stock's in, and about 25% the stock itself. Apple maybe... No,
I agree with you.
Yeah.
I agree with you.
So that would just be...
I've been start listening to you, like since Ken Schiff left TNNS.
Yeah.
And I start listening to your other people, other colleagues, and then I find that your show is the best, actually. Your thinking, makes sense to me.
Yeah. Anything else?
No, I'll probably give you a call in a few weeks if I find something else. But those are my questions for now.
Well, I'm short to the gills, so you probably know my bias on at least for the next few weeks.
Well, I mean, the selling may go away, so I mean that's what's scaring people right now. So,
I think it has to do more with the fact that everybody's seen the numbers from both Europe and China now and knows that they're not going to get a lot of help from either one of those places. So,
right, the GDP came out today, and it was kind of not good.
Yeah, it's always that. The news always catches up after the big move in the market. We're down 22 points with 3.3 billion shares. So we're having a huge down day with volume, and I think we could fall. I think we could fall another 100 points here in the next couple of weeks in the S&P without any problem. So I think we can get down to 1475, probably in the blink of an eye, just like gold. You start getting a market that moves fast in commodities, like we've seen. That happens in it, and as long as things like copper, what's it doing out here today?
Copper went down too.
Yeah, I mean, the old saying for most of the people on Wall Street is copper is the only metal that came with a PhD in economics. So, if this thing's going down, that probably tells you everything that you need to know about the rest of the economy. So anyway,
where do you think the support level of S&P is? So you think it's going to go straight down to 1475?
1475?
That's what I say, right? The S&P.
I think it's headed down there probably before expiration in May. So I think most of the stuff that I'm looking at. Let's see, what is that? Third Friday would be 17th of May. I think we could be down there by the 17th of May. I bought lots of May puts on Wednesday and Thursday last week. So I'm pretty. I think we're probably going to see a lot of it. The market's been weak, and we'll talk about it because I'm going to go to break. Okay. But one of the other things, you asked me what I really like the best. That's one thing. And if you're talking about things that really are trend followers, I like the summation index, the McClellan summation index. And maybe I'll talk about that when I come back. Thanks for the phone call.
Thank you very much. Hey, thank you.
Okay.
Good show. Bye.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
And I see some instant messaging out here. It says Tom O'Brien will be on Bloomberg at 4:30. So you might want to catch him if you're home at that time. Or turn your TiVo on and catch him later. Of course, I'm sure it'll be on the front page of TFNN later. It'll be interesting. Hey, what can you say? What I wanted to bring up in the bigger markets out here is one of the things I've talked about. It does not happen very often, so it's not something, it's like one of these things people are always looking for. Rarely happens. But it's called the double repo pattern. One of the early technical analysis guys that we had on TFNN around 2000 was Joe DiNapoli. He had some things, but he basically traded without volume for a great deal of his life. I think he was working with early computers didn't have a lot of processing power. Pretty much worked a lot in commodities too, so he didn't work with volume that much. But he came up with a pattern that was very interesting. He called it the double repo. And if you want to use a 9-day moving average, that's fine. You can also use a 3x3 displaced moving average. Both of those, in the 9 days, a little bit more smooth. And I'm almost thinking that may be a better one to use with this thing. Maybe things have changed over time in the markets. But what you're looking for is 10 or 15 days above the 9-day moving average. Then you want this thing to close below it for a few days, not one day. Then you want it to close above for a couple of days, and then close back below. So what you end up with is it just has a parabolic move. It pulls back below it for a few days. And what I mean is not a single day above the line, but a couple of days. Then you're going to see 1, 2, 3 days, and then it's going to close back below that line. And if you want to see when massive moves in gold and commodities come in, also in the market, minus a volume out here, not a bad signal to tell you that a major top has been put in for a while. Let me go out here and zoom out here just a little bit. But what you're looking for is that 10 days. So we'll go through this. You get 10, 15, 20 days, something like that, above that 9-day or 3x3 moving average. So we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 days on the IYT, going up to the high on March 19th. You had 1, 2, 3, 4, 5 days below it. You pop back above it on the 28th of March. You had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. What is that? 1, 2, 3, 4, 5, 6, 7 days below it. You popped above it 4 days ago. 4 trading days ago, and you are now closing down below it. So this is the signal, or a fairly decent signal, that a long-term top is in, and you're going to go into one or two things: huge reversal of the market and or a massive correction with a consolidation. Neither of these are very big signs that a impending rally is coming. You can also look at this with parabolic SAR, some of the other indicators out here. I like this one the best. It is a hard one to duplicate, and certainly not an easy one for the market to give a false report on. But look at that. It's called the double repo. If you Google it, I think you can find some stuff online on it. But it is a Joe DiNapoli thing that he came up with. Like a lot of things, you might not find it useful, but once every 6 months, a year, 2 years. But when they come in strong, and a fairly durable pattern out here, especially with you put it with price and volume movements. But a pretty good signal out there. We'll see you tomorrow, same bat channel, same bat time. See you then.